The hospital charges $12,000. Your health plan cuts that number to $8,000. But the amount you actually owe is still hidden. You pay $420 every month for insurance. So who pays the next dollar? You or the insurance company? We are going to run one fictional in-network emergency room visit through a sample health plan. Keep your eye on the payment ledger. It will show where every dollar goes, why $4,000 disappears before anyone pays, and why one familiar insurance payment never touches this bill. By the end, deductible, copay, coinsurance, and out-of-pocket maximum will no longer look like four ways of saying the same thing. Meet Alex. Alex has a fictional individual health plan and receives covered emergency care from an in-network hospital. The plan card shows a $420 monthly premium, a $2,000 annual deductible, 20% coinsurance after the deductible, and a $6,000 annual out-of-pocket maximum. Alex has already paid $500 toward the deductible and $1,000 toward the out-of-pocket maximum this year. That means $1,500 of deductible remains. The emergency room row says 20% coinsurance after deductible. It does not list a separate ER copay. This is an educational example, not a prediction of anyone's real bill. Actual rules vary by plan, service, provider network, and circumstances. Now let us process the claim. First, the premium. The premium is the amount Alex pays every month to keep the health plan active, whether Alex uses medical care or not. Think of it as the price of having coverage available. But paying the premium does not mean every medical service becomes free. Premiums generally do not reduce the deductible, and they do not count toward the out-of-pocket maximum. So Alex's $420 monthly payment keeps the plan active, but our claim ledger does not move. That is the first important distinction. The premium pays for access to the plan. Cost sharing determines what Alex pays when using the plan. Now the hospital submits a $12,000 provider charge. Because this is our fictional in-network example, the plan's negotiated allowed amount is $8,000. The $4,000 difference becomes a network adjustment. It is not added to Alex's responsibility in this example. This is why the largest number on a hospital statement is not automatically the number used for coinsurance. The EOB separates the provider charge from the allowed amount. Our first mystery is solved. $12,000 becomes $8,000 before the deductible and coinsurance calculation begins. Now make a prediction. Who pays the next dollar? At this point, Alex does, because the deductible has not been met. A deductible is the amount a person may owe for covered services before the plan begins paying for services that are subject to that deductible. Alex's annual deductible is $2,000, but $500 has already been met. Only $1,500 remains, so the first $1,500 of the $8,000 allowed amount goes to Alex. The patient ledger moves to $1,500. The plan ledger remains at $0. This deductible does not restart after the emergency room visit. It normally tracks across the plan year. Once Alex pays this $1,500, the $2,000 annual deductible is met. $6,500 of the allowed amount remains. The deductible is finished, but the bill is not. Who pays the next dollar now? This time, both Alex and the plan pay a share. The plan says Alex pays 20% coinsurance after the deductible. Coinsurance is a percentage of the allowed amount for a covered service. Here, it applies to the $6,500 remaining after the deductible. 20% of $6,500 is $1,300. That goes to Alex. The plan pays the other 80%, which is $5,200. Now combine Alex's $1,500 deductible with $1,300 of coinsurance. Alex's illustrated responsibility is $2,800. And now, every dollar has a place. $4,000 is the network adjustment, $2,800 is Alex's cost sharing, and $5,200 is paid by the plan. Together, those numbers account for the original $12,000 provider charge. But we have not used a copay. That is not a mistake. A copay is a fixed dollar amount for a covered service. It might be $30 for primary care, $75 for urgent care, or another amount set by the plan. Our fictional plan lists a $75 urgent care copay and says the deductible does not apply to that service. But the emergency room row uses 20% coinsurance after the deductible and shows no separate copay. That service row matters. Some plans use a copay, some use coinsurance, and some can require both. The plan may also say whether the deductible applies first. Do not automatically add a copay because you have heard the word before. Read the exact row for the service in the Summary of Benefits and Coverage. Same insurance card, different service, different calculation. Now check the out-of-pocket maximum. This is the most a person generally has to pay during the plan year for their share of covered in-network services. After reaching it, the plan pays 100% of covered in-network benefits for the rest of that plan year, subject to the plan's rules. Alex had already accumulated $1,000 toward a $6,000 maximum. Add the $2,800 from this visit, and the running total becomes $3,800. Alex has not reached the maximum. $2,200 remains. But the maximum is not a ceiling on every possible healthcare expense. Monthly premiums do not count. Services the plan does not cover, many out-of-network costs, and amounts above the allowed amount that a provider may charge, also may not count. The maximum limits qualifying cost sharing. It does not erase every kind of charge. When the claim finishes processing, the EOB should make this calculation visible. Provider charge, $12,000. Allowed amount, $8,000. Plan paid, $5,200. Patient balance, $2,800. The EOB is not the hospital bill. It is the health plan's explanation of how the claim was processed. Alex should compare its patient balance with the bill that arrives from the provider. If the provider bill is higher than the EOB patient balance, pause before assuming the larger number is correct. Compare the claim number, provider, date of service, insurance payment, adjustments, and any amount Alex already paid. The first video on this channel shows 7 red flags to check before paying a large hospital bill. This calculation tells you where to find one of the most important red flags, a bill that does not match the processed claim. Here are 5 mistakes that make health insurance bills feel impossible. Mistake 1. Assuming the monthly premium should have paid the entire hospital bill. The premium keeps coverage active. Cost sharing still applies. Mistake 2. Calculating coinsurance from the $12,000 provider charge. In this in-network example, coinsurance is calculated from the allowed amount after the deductible. Mistake 3. Treating the deductible as a fee that restarts with every visit. It normally accumulates during the plan year. Mistake 4. Adding a copay to every service. Copay rules come from the specific service row in the plan documents. Mistake 5. Believing the out-of-pocket maximum includes every dollar spent on healthcare. Premiums, non-covered services, and certain out-of-network or balance billed amounts may stay outside it. When the numbers become confusing, stop asking, "Why did insurance not pay everything?" Ask a better question. Which rule is paying the next dollar? Here is the complete map. The premium keeps the plan active. The allowed amount is the plan's price for the covered service. The deductible assigns the first eligible dollars to the patient. Coinsurance splits what comes next. A copay is a fixed amount only where the plan says it applies. And the out-of-pocket maximum limits qualifying cost sharing across the plan year. Save this video for the next time you compare a hospital bill with an EOB. Subscribe to Care Costs Unpacked. In the next guide, we will take a real-looking EOB apart, line by line, and show exactly what each column means.